You are listening to Policybazaar.ae's The Policy Project. We've got you covered.
When I started my first job, my father said to me, Sid, now that you've started earning, let me give you a life lesson. Whenever you spend your money, ask yourself, am I incurring an expense or am I building an asset? A couple of months later, when I was complaining about my term insurance premium, he walked up to me and he repeated exactly what he said a few months back. And guess what? I instantly felt better. After all, what better asset is there than a peace of mind that term insurance offers? So, on that note, ladies and gentlemen, I'd like to welcome you all to a brand new episode of The Policy Project. I'm Sid, your host for today, and your go-to person for all things finance and insurance. And in this episode, we'll discuss term insurance. But before we begin, I'd like to introduce you to our case study character for today, who sadly wasn't fortunate enough to have a commerce graduate father like mine or a power-packed finance and insurance podcast like the Policy Project. Okay, let's talk about Zorawar. Now, Zorawar was a guy in his early 30s and a proud resident of the United Arab Emirates here. He was happily married, a father of an adorable kid, and he was also the sole provider for his family since his wife was a homemaker. Now, Zorawar had always been cautious of his finances, but he neglected to consider the importance of term insurance. He believed that he was too young to worry about all of that. Besides, I hit the gym every day and I have such a healthy diet, he was often heard saying. Tragically, he was involved in a car accident and passed away unexpectedly. With no term insurance policy in place, his family was left in a dire financial situation. The expenses of the medical bills and the funeral too quickly drained their savings. The loss of his income meant that his child's future education and daily expenses were in jeopardy. Zorawar's family was forced to downsize their home and lifestyle drastically to make ends meet. The lack of term insurance left them struggling to maintain the quality of life they were used to, and the child's future prospects were severely limited. Zorawar's story highlights the consequences of not having term insurance and how important it is for securing the financial well-being of your loved ones, even if you are young and fit, since unexpected events can have devastating financial repercussions when adequate protection is not in place, which is what we discuss in today's episode. From what term insurance is to how to make the most of it, we'll discuss all things term insurance right here, right now, today. And like always, we're not alone. Today we have with us two experts who are here to tell you guys everything you need to know about term insurance. Ladies and gentlemen, please give it up for our in-house insurance expert, Joseph Terrence, the business head of life insurance at Policybazaar UAE. Welcome, Joseph.
Thank you, Sid, for inviting here.
And extending a warm welcome to our second esteemed guest, Tarun Singhal. He's the head of retail distribution Middle East for Zurich International Life. Welcome, Taru.
Thank you, sir.
Pleasure having the both of you here. And let's dive right in. Term insurance. Are we ready?
Yes.
Yep.
All right. As always, Joseph, we start with you and with the most basic question for all. How do term insurance policies handle scenarios involving policyholders outliving the policy term? And what options are available to them at that point?
So, I think previously we had discussed about what kind of term insurances are available.
Right.
So, people outliving term insurance, there are two options they have. One, basically, if they have taken a return of premium policy, where after the maturity, like if the person has outlived the term, the premiums are returned back to him. That is one option that they have. Second one, which is basically a level term without any return of premium policy. Once the premium term is finished, the policy expires. I mean, it's finished. So there's nothing from that particular policy, but the only benefit is that you can buy another policy for a limited term after that. So we had explained in our previous podcast as well that term insurance is like a pay-as-you-go kind of a benefit that you get.
Correct.
Which is cheap. So once the period is finished, you don't get back anything.
Right. But it's helpful when the policy is there with you. And if anything happens
Precisely. So this is the cheapest mode of ensuring your family's financial interests, basically. So in case anything happens to you, this is the
Mhm.
cheapest form where you can actually ensure that.
Okay. So the next question is for Taru. How can someone know their maximum coverage amount for term insurance before they go for a policy? And can the coverage amount be increased or decreased accordingly?
Okay, that's a great question because it's something that I believe everyone should be asking. So, when considering life insurance, you need to consider two factors. One is the level of income that you're generating and what age
Hmm.
you are, because combined together, it'll determine what is it that we try to insure. So,
Right.
to start with, as a thumb rule, anyone below the age of 40, you can go for 30 times multiplier to your level of income to arrive at a cover.
Right.
And if you're over 40, you can apply a 20 times multiplier. Using an example,
Hmm.
someone who's 30-year-old earning $100,000 a year, for example,
Hmm.
they can apply for $3 million worth of life cover. Okay. But if
Okay.
the same person who's 45 earning 100,000, the multiplier will get you to $2 million. All right. So that's the
Interesting.
basic thing. Uh,
Right.
Most insurers in here don't allow increases or decrease in contribution, but we are proud that we allow increases selectively, but the same formula will apply. So, as an example, if you've already maxed out based on your income and age calculation that I shared earlier on last year,
Hmm.
this year, if you're looking for an increase, it'll be dependent on the increase of your income from last year to this year.
Okay. And when you are touching upon the maximum limit, is there a maximum limit for term insurance as well?
Um, Typically, every insurer would have a limit. We can go up to $70 million on an individual life that we're willing to insure, but everyone would have a limit per se.
And in terms of age?
Age, we can allow people all the way up to 65, 75 to start a policy.
Fair enough. Okay. Joseph, next question for you. And it's a personal query of mine as well. Will all of my premiums be the same throughout the policy term?
Interestingly, yes. So there are two kind of policies that you can take. One is basically a level term policy, which is usually sold across
Okay.
the globe. I mean, that's the most popular kind of a policy that we buy. In that policy, yes, it is level throughout
Hmm.
the term. So you buy a level term policy, say for 40 years or 30 years, it's
Okay.
always the same. The premiums remain the same
Hmm.
unless you increase
Right.
your coverage, which some insurance company like Zurich allows, the premiums would also increase.
Right.
The other one is the annually renewable kind of a term policy, where you're only guaranteeing the
Hmm.
renewability of the policy, but not the premium. So your premiums based on your age, what age is that particular year, but it changes. But to answer in a very crisp manner, it's basically level throughout. That's most popular kind of a policy that everybody sells.
Okay. And when we are talking about like they have group health insurance, Taru, I think you will be able to answer this one. Is there something like a group term insurance as well?
Yes, of course. We call it a corporate policy. So it's basically
Okay.
you're buying a term insurance policy, but using the company scenario for multiple employees. It's mandatory for me to point out that this benefit is not a mandatory benefit in the UAE, unlike health insurance. So that's the differentiation. However,
Right.
increasingly more and more employers are using it as a retention tool for their employees. Just to give you an idea, it's not limited to, but most companies go for 3 times to 5 times annual salary of employees that they're insured for. What it covers for is
Hmm.
if a death happens during employment,
Right.
the family gets
Hmm.
paid this benefit, which is paid for by the company.
Very interesting. Very interesting. Okay. So, Joseph, the next question I'd like to ask you just to understand if there is a medical history of one of the parents, does that affect the insurance premiums and the claim settlements for term insurance?
Definitely it does. So I'm assuming it should be the first degree relatives, like if your parents or sibling,
Huh.
and if they had a history of any medical condition which was probably in their younger age, like not after 60, but before that, say 40s, 50s, yes,
Hmm.
the underwriters do take into consideration the family history, and your premiums would go up.
Okay.
Now, when you
Okay.
say family history, it can be cancer, any cardiac disease, or death
Hmm.
probably due to any illness. So those are the conditions that we
Right.
can take into consideration.
Okay. Okay. And let's talk about the pricing. Taru, if you can help us here. Is it different for regular customers from the diabetic ones when it comes to term insurance? Are the pricing varying too much?
Okay. Uh, First of all, I would like to say that we had released earlier this year our benefit claims report, and part of the report was
Hmm.
that 97% of the applications that we had received were accepted at some terms.
Oh,
Interestingly,
nice.
37% of those customers were diabetic. All right. Now, there's a
Mm.
differentiation between if typically a type 1 diabetes, which is well controlled, you have a very
Hmm.
good chance to get standard rates. By that, what I mean is a person who does not have a pre-existing condition. All right. Having said that,
Mm.
if you have diabetes, then there is some exclusion that we can apply, or there could be a rating that we could apply, or we can offer you a different cover. So for that, it would be a different pricing.
Interesting. And so, Joseph, if we talk about the claim settlement process and the time which is consumed in that, are there any specific steps that the policyholders can follow to quicken the process or the average time which one can expect?
So, Sid, the basic thing is once there is a claim, intimate the insurance company as soon as possible. So, once you intimate
Right.
the insurance company will tell you what are the list of documents pertaining to that particular claim. For example, if it's an accident claim, death due to an accident, then it
Mm.
will be probably a death certificate, police report, and all that, right? So,
Right.
yeah, you will get the list of documents from the insurance company once you intimate them about the claim. Now, once you submit all your documents, required documents, it takes about 15 days, 15 to maximum a month time to settle. It depends from company
Okay.
to company, but usually it's 15 days, 15 to 1 month time, I think. Claim settlement should happen.
Okay.
That's only after the documents are submitted and the claim is acceptable.
Fair enough. And sometime back, we were talking about cancer as well being one of the very key factors when anybody takes term insurance. So, Taru, is there a cancer only critical illness cover in term insurance policies?
Sure. So what we have is a critical illness plan, which is dedicated
Hmm.
to, as the name suggests, to cover someone exclusively for critical illness. Now, it covers about 34 illnesses in total. It
Okay.
offers cover between for a term of 5 years to 35 years, up to a maximum age of
Hmm.
80. And it's interesting. I mentioned earlier on with regards to the benefit claims report that we had released earlier on. And part of
Yeah.
that, the report, it came out that 92% of the critical illness claims were down to three illnesses, namely stroke, heart attack, and cancer, which are all covered. Right? Now, if you happen to have a pre existing cover, which perhaps will disqualify you for a comprehensive critical illness cover, what you could look at
Mm.
is cancer only cover. So, whilst it's not
Okay.
comprehensive, it'll cover you for cancer, certainly. So, that's an option that is available too. You touched upon that question. If someone has got diabetes, for example, type 1, not very well controlled, they could look at cancer only cover.
Very interesting and very insightful segment as well. Thank you so much, Joseph. Thank you so much, Taru. Now, let's move on swiftly to our next segment, which is Ask Away. All right, so here we take up FAQs by our customers and respond to them with the help of our experts. Now, if you too are an inquisitive and a curious learner like myself, and you've got questions about finance, insurance, don't hesitate. Just ask away. Slide into our DMs on Instagram, follow us at Policybazaar.ae, or reach out to us via any of the other social media channels, and we'll try our best to answer your questions in the next episode. Today, however, we will be touching upon term insurance related questions that we've received in our inbox. So, Joseph and Taru, ready with your answers?
Yes.
All right. So, Joseph, we start with you. This is from Shirley from Sharjah. What role does the insurer's financial strength and credit rating they play in choosing a term insurance provider?
That's an interesting question. So, your term insurance or your life insurance is a long term commitment from
Right.
your side as well as from the insurer's side, right? Now, better the credit rating of a company, the better chances of the company staying there till the end and your claims being paid is, right? So,
Hmm.
your financial strength of an insurance company states that what is their claim paying ability and what is the kind of risk that they can take, right? So
Right.
I would suggest the better the credit rating, that's like the best company to go for. Yeah, it's always better to take a company with a higher credit rating.
Surely, we hope you got your answer. Thank you so much, Joseph. Now, the next one is for Tharu, and this is from Mitesh from Abu Dhabi. He wants to know, can you explain the distinctions between whole life and level term insurance plans, along with their respective benefits?
Very interesting question, and it's something that gets asked quite frequently. So let
Right.
me start with I think Joseph touched upon it. Term assurance is level term assurance, where your cover and your premium remains the same throughout the term of the plan.
Right.
It's available, as I touched upon, between 5 and 35 years, up to a maximum age of 80
Right.
for a customer. At the end, Joseph again touched upon it, pay as you go. So this doesn't have any value once the term is over. The cover expires, and there is no further value that you can take out.
Okay.
With our plans, you can get life cover,
Okay.
critical illness, permanent total disability, and waiver of premium as benefits. Uh, if I move on to the whole of life for a minute, it offers value. So if you
Okay.
no longer need the cover, you have an encashment value. So you can withdraw that money and use it for whatever purpose you want to. I touched upon the benefits under term insurance, which is life cover, critical illness, permanent total disability, and waiver of premium. In addition to this,
Right.
our whole of life plan will offer you fixed term income benefit, family income benefit, accidental death benefit, to name a few. If I talk about the purpose, term assurance normally is associated with debt cancellation or for a purpose that you're trying to protect yourself.
Right.
Whereas whole of life can be used for any purpose, including debt cancellation. It can be for covering you for whole of life.
Okay.
Term assurance to me is inflexible, whereas whole of life offers you flexibility, like how often you want to pay. Do you want to increase benefit? Do you want to decrease benefit?
Right.
Do you want to add a benefit later on? Do you want to remove a benefit? All that flexibility is available to you. Last but not the least, I think the most important distinction for me is term insurance is for a specific purpose, whereas whole of life caters to as life takes you, because life is not a straight line. It goes up and down, left and right. It caters to all scenarios.
Very true. Very well said. Okay. But does the policy premium also change between whole life and life level term?
Absolutely. Absolutely. And depending on the age of the person and the cover that you're requesting for, it will vary. Absolutely.
Okay. All right. Mitesh, hope you got your answer. Now, the next one is for Joseph, and this is coming in from Alain. Bibin wants to ask, can you explain the difference between renewable term and level term insurance?
Interesting. So as I had mentioned earlier, one of the questions, there are two kind of policies that you can take. One is a renewal term, which is called the annually renewal term, and a
Right.
level term. So the difference in the benefit is basically your premiums are level throughout the policy term in a level term insurance. For example, if you've taken a level term insurance for 35 years, you pay the
Huh.
same premium for 35 years. Your benefits don't change.
Right.
Now, when you
Right.
talk about annually renewable policy, even if you say, okay, I'm taking a annually renewable policy for 10 years, your premiums change every year depending on your age. So this is
Okay.
only taken in a sense for people who say that, okay, you know what, I'm going to pay a lower premium now today, but I'm okay to pay higher premium as I age.
Right.
The only benefit here is that the insurance company says that, okay, whatever happens, we will renew the policy. We will give you a coverage next year as well, provided
Correct.
there's no breakage and you keep paying the premium, increased premium. So every year it will be an increased premium on a level term.
Right.
Benefit wise, I don't think so there's any other changes in the benefit, except for probably critical illness or any other benefit can be restricted at a certain point.
Interesting. All right. Bibin, we hope you got your answer. And Neha wants to know from Taru, what's the significance of the contestability period in a term insurance policy? And how does that impact the policyholder?
Okay. So referring back to again our customer benefit page report, we got an
Yes.
idea that 95% of all the critical illness claims that we had received and 98% of the life cover claims that we had received were paid. Now, the question is, why was the 5% not paid, or why the 2% of life cover claim was not paid?
Correct.
The answer is quite simple, because of fraud or misrepresentation or non-disclosure. So my advice to all the listeners is, do have full disclosures with regards to your health and everything that you have to declare on the policy. Whilst we do not have contestability clause in our policy, what we do is we reserve the right of investigating any claims where we have reasons of suspicion that perhaps not material disclosure was given to us.
Okay. Is that the only reason, or anything else could also be the problem?
Sometimes there's also something called waiting period. Certain benefits could say that if you start your policy, say on 1st of January, there's a waiting period of 90 days, which means if the claim happens within 90 days, it's not paid.
Right.
So that could be another reason why it will not be paid.
Fair enough. Fair enough. All right. Last question, and this is coming in from Kareem from Dubai. Now, he wants to know, what are the key factors to consider when deciding the term length of a term insurance policy? And I think a lot of people have that question. Joseph, that's for you.
That's something that everybody wants to know. Yeah, I know. So when you decide on a term policy, or when you buy a term policy, the first thing your financial advisor or person who is actually pitching you the policy would ask you, so what are you taking this insurance for?
Right.
Right. So if it is against mortgage, if your mortgage is for 25 years, you take it for 25 years. Now you say, okay, my daughter is young and I want to make sure she goes to college and I need protection till that time. It
Right.
could be a 20-year policy in that case. So if you have planned your term insurance for specific events or whatever it is, then your term of the policy will be based on that.
Okay.
And if you say that, okay, you can also take it another way, like, okay, I am going to retire at 65,
Right.
and now I'm going to take a policy now. So you will say, okay, up to my retirement, I am going to earn, right? And if anything happens to me in between, my family is going to get affected, and I don't want
Right.
them to get affected. So let me take a coverage which is till age 65, or probably 85 for that matter, depending on what exactly your need is.
Right. Right.
So your term is basically that. That's how you choose your term of the policy.
Very interesting.
But one thing to note is your maximum term that you can buy in UAE is usually 35 years. On exceptional cases, some companies give you up to 40 years of term.
All right. Okay. So this brings us to the end of Ask Away, this segment. But don't go just yet. If you have any questions about financial wellness, about insurance, simply DM us on our Instagram. Follow Policybazaar UAE. Reach out to us via any of the social media channels, and we'll try our best to answer your queries in our next episode. For now, I hope we are updated with our term insurance knowledge. We'll meet again in the next episode with more informative and insightful content along with our lovely experts. Thank you so much. Delightful conversation as always about term insurance. Joseph and Tharu, it was a pleasure having you.
Thank you.
Thank you so much, Sid. Pleasure here as well.
Wish you the very best, and along with our lovely listeners in today's episodes, thank you so much for coming on board, and we'll see you in the next one. Till then, take care. Stay tuned.
You were listening to Policybazaar.ae's The Policy Project. We've got you covered.